market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. It's been a volatile week dominated by geopolitics, from defense to tariffs. Now, in just a moment, we'll head to Beijing as tensions rise between the world's largest economies. But let's begin in Washington, where President Trump is pausing tariffs on some Mexican and Canadian goods. Now, the duties are now delayed until April the 2nd, when Trump is expected to unveil plans for global reciprocal tariffs.
Most of the tariffs go in April the 2nd. Right now, we have some temporary ones and small ones on relatively small, although it's a lot of money, having to do with Mexico and Canada. But the predominant tariffs will go, they'll be reciprocal in nature.
Let's bring in REMEA News Director Roz Matheson. Roz, we're seeing these like sharp and pretty big moves in the markets because the tariffs are all over the place. Like, what do we know Trump's endgame is when it comes to tariffs?
Well, that's right. If you're a trader, it's very volatile, and maybe you can make a lot of money out of that, but also you can get a sense of fatigue coming in because these announcements are made and then they're changed very quickly, or things are exempted or partially exempted. I mean, if you're a company trying to operate in this environment, it's a bit like Brexit. It's quite hard to make sure that you're going to be compliant. And so there's a question there. Is this intentional? Is this just part of this idea that he likes his administration to operate in a sense of chaos almost, keep people on their toes? Or is it a reflection of the fact that he's just changing his mind very often? We know there was a parade of companies that went to the White House to say, hang on, you're doing this on tariffs, it's going to affect us badly. You know, automakers, other companies going and saying, this is really going to impact us, can we slow down? And he does maybe listen to that, but it's also just a very, very difficult environment then to understand, as you say, what is his end game? Does he get enough of what he thinks as a win from Canada, from Mexico, from China, from Europe, from elsewhere, to say, OK, I've got what I wanted and tariffs can go? I mean, his language on fentanyl was very interesting because he's been very, very critical of Mexico and Canada and China over the drugs trade and shipments of drugs into the US. And even a day or two ago saying similar, I'm not seeing any action on this. Overnight, suddenly it's like, oh no, things are really improving.
Yeah, and Rose, I think there was always like a belief that, again, his North Star, or how he measured success, was the stock market. And yesterday he seemed to suggest, first of all, that wasn't the case, but also he believes these market moves are because of globalists.
Well, that's right. I mean, markets are clearly responding to this and responding with some concern quite often, and whether he truly listens to markets or watch them. I mean, he's a businessman. Of course he watches what the markets are doing, and he's very much obviously listening also to what major US companies are saying. I mean, if you're a company operating outside the US and you're affected, I don't think he's particularly interested in that. But if you're a very big American company and you're going to the White House and saying this is going to have a negative impact on our business, and quite quickly, and also on our hiring, because that's the thing that we're going to see this start to filter through. He's cutting the government, so he's cutting a ton of jobs in the government. If companies slow down on hiring because the environment is too confusing, and you see that filter through to the economy, so you can see Trump's mind perhaps working in that direction.
Yeah, and we've seen also a couple of the indicators actually pointing to that direction. Roz, as always, thank you so much, Roz Matheson. Roz has had a big week trying to cover all of this news. Now, you've been hearing geopolitics, of course, dominating the markets this week, despite the latest tariff reversal by Donald Trump. The S&P 500 heading towards a third straight week of losses. The Nasdaq nearing correction territory. Now, the bond market, or the debt markets, German bonds stabilized, but remain on track for their worst week since the nation's reunification in 1990, with the sell-off, of course, rippling across global bond markets. Now, on the FX front, euro had one of the best weeks in 25 years against the dollar, lifting by the EU's plans to ramp up defense spending in light of the U.S. administration's differing approach to foreign policy. So it's very clear that anything that's coming out of the White House is also changing behavior of others, and therefore changing how the markets react. Also, China's top diplomat has accused President Trump of taking a hypocritical approach to bilateral ties and denounced tariffs. Now, that's as tensions rise between the world's largest economies. The Foreign Minister Wang Yi delivered his message at a high-profile briefing.
Mutual respect is a basic norm governing state-to-state relations. It is also an important prerequisite for China-US relations. No country should fantasize that it can suppress China and maintain good relations with China at the same time. Such two-faced acts are not good for the stability of bilateral relations or for building mutual trust.
Now, for more on all of this, we're joined by Stephane Engel, Bloomberg's chief North Asia correspondent outside the Forbidden City in Beijing. Stephane, thank you. Some strong words from China's foreign minister during this briefing at the NPC. What were your key takeaways?
Yeah, I think the news flow out of China today probably not sitting too well with the Trump administration. You have those sharply worded comments from Wang Yi, the top diplomat, the foreign minister, of course, a very senior figure here in the Beijing government. And then you had also those trade figures, a lot of front-loading of orders going into January and February ahead of the tariffs led to a surge in exports. And that led, because imports dropped off, it led to a record trade surplus again of nearly $171 billion. So that won't sit well. But those comments from Wang Yi were interesting. He didn't necessarily say anything new. This has been the constant narrative. But if anybody who knows Wang Yi, they know that he is probably the most outspoken minister among the many agencies in China. He doesn't mince words. He called Donald Trump's administration essentially two-faced on the fentanyl issue. He says fentanyl is an American issue and that anybody who knows China's crackdown on illicit drug trade knows that China is one of the toughest in the world. So he basically labeled the Trump administration two-faced to levy 20% tariffs because they claim that China has not done enough to stop the flow of the precursors to fentanyl that eventually leads to the United States. He also kind of wanted to portray China as being the adult in the room in this relationship between China and the United States. And he blasted the Trump policies quite consistently. I was in that press conference, one after the other accusations. He twice referred to the Trump administration's policies as the law of the jungle and that China was really adhering to rules-based policies going forward. So again, trying to portray China as the adult in the room. He went on to say China opposes what he called double standards, trickery, and bullying. So you can see he did not mince words. Sort of the acerbic side of Chinese diplomacy, which is usually pretty moderate in its tone.
Yeah, and of course this adds uncertainty over the prospect of talks to broker a trade deal. Stephane, as always, thank you so much for joining us. Stephane Engel there with the most beautiful backdrop in Beijing. Coming up, our exclusive interview with Stephane de la Faverie, the president and chief executive of Estee Lauder Companies. This is his first interview since taking the role earlier this year. That's next, and this is Bloomberg. Now, global beauty and fragrance giant Estee Lauder is overhauling its corporate strategy to try and return the company to sales growth. The firm has a global portfolio of brands, including La Mer, Tom Ford, and of course the eponymous Estee Lauder. But they face a range of challenges, from upstart rivals to a slow rebound in China, and now the threat of a global tariff war. Estee Lauder named Stephane de la Faverie as chief executive officer late last year, betting the company veteran can execute a turnaround and improve share price performance. Well, he joins us now for an exclusive interview, his first since taking the top job. Stephane, thank you so much for joining us. You got the job, and within a couple of months, you laid out a very interesting and important strategy to simplify the company and kind of to see the way forward. I mean, now there's just so much geopolitics, tariffs, trade wars. How does that change your thinking?
Oh, thank you. Thank you, Francine. Sorry for having me. First, I'm really excited to be here to talk about the strategy. Our strategy clearly has been laid out, a few weeks ago, as called Beauty Reimagined. And we are very clear that our mission is to reignite growth and reestablish a solid double-digit operating margin for the company. Everything that is happening out there is basically taking into consideration. We have solid and iconic brand in the portfolio of the Estee Lauder company. You've mentioned some of them, from La Mer to Estee Lauder to Tom Ford, Jo Malone London here, in the UK. And we are very convinced that our brands are really meeting the consumer demand around the world. We just need to be more agile. Right. We need to be faster. reacting, to the trend of, the consumers. And one of the things that I've committed is to make sure that we follow the consumers where they are going. We need to be more reactive to where the consumer goes, and we need to simply just make sure that we give them the innovation that they are looking for in the time that they want it.
Stephane, what does that look like? Is it actually following them on social media? Is it, them being at events? And again, I guess a U.S. consumer shops differently to a Chinese consumer that shops differently to an Italian consumer.
No, absolutely. Well said. I think one of the things that we've been in business for close to 80 years now, one of our trademark is to be a global company, but the most locally relevant company wherever we operate around the world. So that we are in China, we are in the US, that we are here in the UK, we make sure that we use the different media that are at our disposal to connect with the consumer, but also making sure that we give to our consumer products that are also locally relevant to their need. Our communication in the UK or our communication in China are different because they are tailored to be relevant to our consumers.
Stephane, what can you tell us about how consumers have been behaving so far? So again, does the specter of tariffs or trade wars change where you want to be present or where you produce or how you ship? Or does it change consumer appetite? Or are they holding back a bit?
So from a tariff standpoint, what we say, way before, tariff became a conversation, we've decided to make sure that our manufacturing network was as close as possible to the consumer. So we have manufacturing network in the US, in Japan. We have also some here in the UK and in continental Europe. So it always allows us to just be closer to the consumer. And that was always our strategy, to be locally relevant also and to be close to the consumer, which, by the way, allows us also to reduce our carbon footprint because we are closer to the consumer. So in this moment in time of tariffs, it allows you to dial up and down where we are producing the product around the world and to consume. But to your second part of your questions, because of the local relevance that we've put in place for every single of our brands, we make sure that we connect with the consumer where we are, and we create love mark with the Chinese consumer, with the British consumer, with the French consumer, wherever they are around the world. And so we remain focused on delighting them.
Stephane, you've been in beauty for a very long time. What's the trend that's surprised you the most? I mean, we've seen a lot of, big brands coming from nothing because they speak to the consumer directly. I think Korean skincare has taken certainly the London newsroom by storm. Is there something that you see as the next big thing that you want to be part of?
Well, it's fascinating. Trends have always been something just driving our industry. But what I see today is trends are accelerating. Consumers are more in control than ever before because how they communicate, between communities in social media platform. You talked about Korean skincare. We have a brand called Dr. Jart, which is really at the essence of Korean skincare today. But to tell you a few examples of trends, we see people wanted to live longer, better. Longevity is something that has increased dramatically. So with the Estee Lauder brand,
a good idea?
It's a good idea. Don't we all want to look better, longer? So with the Estee Lauder brand, we've created the Skin Longevity Institute, and with product Reprieves, which is our luxury range with Estee Lauder, we've made sure that we communicate with the consumer more longevity. But you have other trends in the world of perfume. Also, perfume has always been something strong. And we see the net acceleration around the world, that is in China, in the US and in Europe. And we see younger consumer driving the trend because it's no longer about just one scent that you, Francine, or me like. It's about a wardrobing of fragrances that is tailored for different occasions.
So what does that mean in terms of pricing? And so it means that you probably have to, so as a consumer, I have 5 perfumes instead of 1 that I wear for occasions. Do you have to be more careful with pricing?
So we have different price architecture depending on the brands. And I think often the pricing is defined by the distribution that we have. We have sometimes very narrow distribution. Take a brand like, Jo Malone. It's more a direct-to-consumer brand here in the UK where we have multiple stores. And we've opened many more in the past years. So we have different price tiers for different consumers. But you said it. The consumers is looking to increase their wardrobe. We've seen post-COVID everybody around the world increasing from, if you are in Europe or in the US, from like, anywhere from 5 to 6 to 7 fragrances that you own. And even in China, from like, 2 to 3 fragrances that gives us an additional runway for growth.
Stephane, what's your biggest segment? And again, you kind of have it all, right, in your portfolio of companies. You have very high end, you have the kind of more middle market, and the things maybe for the younger kids. What is the trend that is growing the most? Is there a segment that's growing the most?
Yeah, that's actually a good question. We see the top of the luxury being extremely resilient, like, brand like La Mer, brand like Estee Lauder, reprieves, like, our top of our range, but also our luxury fragrances continue to grow tremendously well. And we're creating the right experience. Consumers are looking no longer to a transactional relationship between the brand and them. They are looking at an experience, something that we can bring to them.
What does that look like? Stores?
So in stores, but even online. So the way you interact. We have beauty advisor on our brands everywhere around the world. We see consumers coming and sitting in the chairs for 20 minutes to an hour at a time to really experience and to learn more about how to use our product. But at the same time, we see the entry of prestige increasing. One of our latest acquisitions, The Ordinary, has been a resounding success for us since we acquired fully the brand in 2023. And we're seeing it as a new segment that is growing for the consumer, as Clinique basically is also like, doing it, and it did it for the last, like, multiple decades.
Stephane, is there anything that you want to get rid of? So when you look at your brands and you simplify, do you say, actually there's 1 or 2 brands that don't really fit within what I want to do? And so first of all, do you have, brands like that? And do you think you'd be able to find an acquirer in these turbulent times?
So we always look at our portfolio of brands, and we do a thorough analysis of not only the product but the brand every year. And we just finished actually our strategy cycle to just look at how, because brand needs to evolve. They also need to evolve because the channel is evolving, consumers are evolving. So we are doing a very clear focus. We've launched a few years ago a group called NIV, which is the new incubation venture. We're also doing a lot of minority investment. We did minority investment in India, minority investment in China, minority investment here in the UK. So we are constantly sourcing like, new brand that could become the big brand of the Estee Lauder company next. This is how DCM came along for us. Yeah. DCM was a minority investment that we took as majority and finally became the full owner in 2023.
Stephane, one of the trends that we're seeing, which has also gotten a lot of pushback, is actually tweens, children that are not even teenagers yet, wanting to get into the skincare brands, and possibly also, if not ruining their face, certainly putting stuff that's not appropriate. What are you doing to help with that?
Francine, we're very clear. We don't market to consumer of less than 18 years old. And we've been always clear. This is what has been our guiding principle since the close to the last 80 years. And we're working very closely with different associations, but also in our communication to tell consumer what they need to do. If we want to become the best consumer-centric beauty company in the world, we are really tailoring our communication to consumer. Younger consumers only need to use a cleanser and sunscreen. That's it. They don't need to use anti-aging product, and we're clearly focusing on that and communicating wherever we are around the world.
Talk to me about AI.
Yes.
So AI, I imagine, can change the way that you see your supply chain. It gives you a better feeling of what people want to buy and not. How much more will you use AI in the coming years?
Well, AI is obviously on everybody's lips, and it's I'm fascinated by it. I've announced it. We're going to hardwire AI in everything we do today. Yesterday, we've announced a partnership with Microsoft on something we call Consumer IQ and Trend Studio. Think about it. We have 80 years of data that is our proprietary data that through a consumer IQ system, every single product marketer in our company has access to every single piece of data for every brand. And that's a proprietary information. We are linking that to something called Trend Studio that mine all the trends that we're seeing around the world. And this Trend Studio match it to an insights and a product. Today, our product marketers internally can just create a brief in a matter of seconds. That allows us to connect with the consumer in a much more tailored way. The way you want to be talked to, the way I want to be talked to, is something that we can achieve at the speed of light and creating a lot of efficiency. You also mentioned supply chain. In the supply chain today, we've hardwired already AI through everything we do. And we see our forecasting model has dramatically improved to be able to just make sure we deploy the right product at the right time based on a lot more insights.
Stephane, when you look at, you've really hit the ground running, right? You became chief executive, you've announced a lot. What do you need to deliver? What's the biggest thing that you worry about given what you've proposed?
The biggest thing I need to deliver is that we need to reignite growth for the company. We know we've been in difficult places because we've lost our agility and we didn't meet the consumer where they were and with the right innovation. So my role with the one of my team is to reignite growth and to rebuild profitability. To do so, we'll just move quickly in new channels, we'll accelerate innovation, and we'll increase investment towards the consumers.
Are you confident about China? China's been like a sore spot for Estee Lauder.
I just came back from China, and I left China, I was in Shanghai, and I met, with many government officials, Shanghai Party Secretary Chen. I met also with my team. I think we are coming at the normalization of, the difficult moment of China. It will take some time because consumer sentiment is still extremely subdued, but we are seeing now a beginning of acceleration. And I'm with brands like Estee Lauder, with La Mer, we've been able to gain share. Even a brand like Le Labo gained 50 points of market share in the last quarter. So we're seeing some good green shoots.
Stephane, I'm going to come off air and we're going to be asked what's the one beauty tip.
Yes.
What's your one beauty tip? In 10 seconds.
Okay, I'll do that.
Do you use, is there a product that we should all be using?
Absolutely. I use Advanced Night Repair every day.
Night Repair.
Night Repair.
And then we'll all look 20 years younger. There you go.
We will do.
Serums, the way forward. Stephane, thank you so much for joining us today. That was the Estee Lauder Chief Executive, Stephane de la Faverie. Coming up, Europe's defense is in the spotlight as the continent contemplates less U.S. support. We'll bring you the details in today's Big Take. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump's shifting approach to tariffs and geopolitical uncertainty whipsawed financial markets, putting the S&P on track for its worst week since September. China's top diplomat accuses President Trump of two-faced acts over tariffs as tensions rise between the world's two biggest economies. Bitcoin falls after a Trump executive order for crypto reserves disappoints investors. Now, the White House crypto czar saying taxpayer money will not be used to buy digital assets. So EU leaders have agreed to explore reform of fiscal rules to boost defense spending, but the emergency summit in Brussels will actually do little to alleviate concern that Europe is highly vulnerable to attack if it can no longer rely on the U.S. Now, speaking to us this morning, the EU's Defense and Space Commissioner said Europe is waking up to the threat.
There is more and more understanding among European leaders that we need to take much more of responsibility on European defense onto our shoulders. Also, much more of understanding, that threats coming from aggressive Russia are real threats.
Now, for more, let's bring in Andrea Pallasciano, who co-written a Bloomberg Big Take on Europe's current defense capabilities and how they would fare against Russian aggression without Washington. Andrea, thank you so much for joining us. It's a great piece. I urge everyone to go and read it. We will push it out also on social media. Take us through the continent's current defense capabilities.
So right now, Europe's defense is really embedded in NATO. So it doesn't even understand how it's supposed to defend itself without NATO, because for the past decades, the defense of the continent has been interlinked. And so Europe relies fully on the U.S. for certain things, such as the nuclear umbrella. It is to this day protected by the U.S. nuclear capabilities. And so standing on its own, Europe is currently reviewing its troops, so to speak, and seeing what do we have and what don't we have. And there are clear gaps. So, for example, the total number of troops in the EU or on the European continent is no match for the likes of Russia, of course. And it also comes down to things such as ammunition, air defense, missiles, troops, but also like how do you transport tanks across the continent?
Andrea, just how dependent is Europe on the US at the moment?
At the moment, extremely dependent. When you ask experts and like defense sources, like, can Europe hold its own without the US? If it were to be attacked right now, the answer is simply no, because it fully relies on what we call like the strategic enablers, and those are the capacities that only the U.S. have to really enable a war. And those capacities, very concretely, are air and missile defense, strategic intelligence, space communications, but also control and command. So really, like the full scope of the things that really allow a continent to wage a war against a next-door neighbor. For those things, Europe today really needs the U.S., which is not to say that it can't do it on its own going forward, but I would say we are years away and hundreds of billions of investments away from that situation.
Yeah, so this is a problem, and it's a problem of timeline. How much time do you think is needed, Andrea, through all of your great reporting, to get to a point where Europe can operate without the U.S.?
So we are speaking in years. We are really speaking in years. We're seeing some first positive signs, of course. With the summit yesterday, leaders across the continent are starting to unleash those much-needed billions for investment so that the industry can ramp up. But we are indeed years away because certain things are simply really difficult to develop. Air and missile defense are extremely sophisticated systems, extremely expensive systems. But also something like a nuclear deterrence is obviously not something you can rethink in a heartbeat. So now we have seen that Macron has made some overtures to his European partners, considering extending the French nuclear protection to neighbors. But we see that some of the changes that would be required for Europe to step up without the U.S. Run really deep.
Andrea, thanks so much. Andrea Palasciano in Brussels. I urge everyone to go and read today's Big Take. Now, also joining us is Marie-Pierre de Bailliencourt, Managing Director of the Paris-based think tank Institut Montaigne. But Marie-Pierre, thank you for joining us. It's been a big week in terms of also of a U-turn or 180 degrees with Germany trying to spend a lot more on defense, which really changed everything for Europe this week. What's your biggest concern now in terms of foreign policy? Can allies of the U.S. still rely on them?
Well, this is a good question because honestly, President Trump has reshuffled all the cards. Europe was made for trade and peace. It was not made for war. And the question and the declaration of President Trump, not only on defense, on NATO, but also on tariff, has opened a vast unknown about what may lay now in front of us. So the question about the West, does the West still exist, is really what is happening. But to move, forward to the comment of your previous guest, I shall say that Europe has the know-how, Europe has the infrastructure to defend itself. It lacks the budget in a context of a huge public deficit, and it lacks the coherent will to move all together.
So what's the way forward, Marie-Pierre? First of all, can Europe actually stay united?
I do believe that, in a way, Trump is helping Europe to make up its mind on how it wants to move forward. So we have, of course, some disalignment, not in principle, but in practical stuff. For example, Hungary and Slovakia are closer to Russia. Italy and Poland are closer to the US. But these different shades of proximity could be also used as levers for mediation power. So yes, I do believe, to answer your question, I do believe we have ways to mobilize together.
Yeah, when you look at the mobilization, is this the return of the Franco-German axis, or is it something else?
No, I think it's something else, even if basically France is moving closer to Germany, but also to the UK and to the Scandinavian countries. As you know, there is a very specific posture on behalf of France and the United Kingdom to nuclear deterrence. So the question about military mobilization is twofold: the classical involvement and the nuclear involvement. And those are two different paths forward, even if they intersect at some point. So yes, there's definitely a closer, a deeper dialogue between Germany and France at the moment.
What's the right way of actually unlocking, these big numbers? We had a Draghi report that was, put to one side, saying we can't possibly come up with the money. It seems that in terms of European defence spending, the EU now wants to unlock 150 billion plus 650 extra billion. Will we be able to find the money?
Well, I think the issue is not the money. The issue is how money transfer into industrial equipment, defense equipment programs per se. So if Europe is really serious about spending this money, it should really, really take care of not making it a technocratic and very regulatory, normative, administrative pound sum, but really give this money to the states which have industrial capacity. And honestly, Europe has a lot of industrial capacities. The stock market in France, with regards to this defense industry, has skyrocketed. For example, Thales has taken more than 60% increase of its share trade, and we have Airbus, we have Safran, we have companies in Netherlands, we have Kongsberg, we have Saab. I mean, Europe is not naked when it comes to defense industry.
Marie-Pierre, can you talk to me a little bit about some of these tariffs? Again, parts of the markets are bewildered because it's unclear what's on, what's off. They get put on, then they get delayed by a month. Do you think Europe will be hit by some of these tariffs, and will they retaliate?
Yes, definitely. There is a huge concern at the moment in Europe about this tariff war. But here again, Europe is not defenseless. For example, during the first Trump administration, we had decided to retaliate against some geographies or activities that were linked to activities in Trump's election basis. For example, we raised tariff on Harley-Davidson product of 50%, more than 50%, it was 56%. And as a result, Harley-Davidson factories had to be relocated, part of the production from Wisconsin and Pennsylvania to Brazil and Thailand. So there was a retaliation effect that was really strong. And we see in Europe a lot of American companies starting to feel the heat as well and being concerned. And everybody is saying, how much leverage this American business have to restore free trade in Europe. So the first instrument of retaliation is countermeasures, such as the one I explained on Harley-Davidson. The second measure is about precisely redirecting trade with the 50 countries Europe has trade agreement with, like Japan, Canada, Mexico, South Korea, and deport the trade relationship from the US to these neighboring countries. And of course, we can also de-risk our supply chain. And if we de-risk our supply chain, that will hit very strongly US, especially when it comes to energy, to chips, and to some raw materials. So the consequences are real, and everybody is really, really concerned, while at the same time not being powerless.
Marie-Pierre de Bailliencourt, thank you so much for joining us, the Managing Director there of the Institut Montaigne on defense and, of course, these changing foreign relationships. Now, coming up after a turbulent week in the markets, investors look ahead to U.S. job numbers out in a few hours from now. We get the latest next, and this is Bloomberg. Geopolitical uncertainty and conflicting signals from the U.S. have whipsawed financial markets, putting the S&P 500 on track for its worst week since September. Now, for more, let's bring in MLive's Ven Ram. Ven, thank you for joining us. It's been a wild week on the markets. Is it all about, recalibration of spending in Europe, but Trump tariffs, or is it really worries that the economy is also shifting because of these bigger trends?
The economy is in a flux, no doubt, no question about that, Francine. But I think in the case of what we saw with Germany this week was about supply. Gone are the days, if you wind the tape back before the pandemic, I think Eurozone as a whole was raising less than 700, 800 billion in bonds, new issuance every year. Now, after the pandemic, we haven't seen a single year with less than 1 trillion. Now it looks like this year it's going to go a lot higher, so it's going to be a record. And so investors seem to be saying, look, if you're going to borrow a lot more, you'd better be prepared to pay a higher yield on those assets. And that's what we have seen with Germany. But, I think that, part of the shock that we have got, Francine, this week is the fact that it all exploded on our face, really. No one expected Zelensky to go to the Oval Office and come back with the kind of reaction and the reaction that we have seen. So I think that there's been a seismic shift in geopolitics, as you mentioned, and I think that, Germany has shown that they're willing to spend a lot more, and they're even willing to revise the debt limit, the debt brake. And the European Union is also saying that they're willing to revise their debt, the common issuance. And therefore, I think that, bond investors are in for higher for longer in terms of rates for now.
So what are you expecting for U.S. payrolls today?
Well, I think that, ADP was a shocker, but we also know that it has little meaningful correlation with non-farm payrolls. We've got the Doge-related layoffs looming, but I think that that'll show up more in the months to come. If you look at the telltale 2-month 10-year yield curve, Francine, I think that has inverted again. And of course, it's lost some of its signaling information in the past, in this cycle at least. But I think the fact that it has come back below zero tells us that, what the markets are fearing. The markets are thinking that, look, is this all going to trigger a recession? And if so, what does that mean for corporate earnings? So in the context of all that, I think today's report is going to be particularly important, and the ones to come as well in the coming months, because with the Doge-related layoffs looming.
When you look, Ven, at actually, some of the currency, it's probably some of the most interesting things on. I know there's been a lot of talk this week about euro strength, but I wonder whether we also need to flip it and look at whether if, President Trump wants to get blue-collar jobs back in the U.S., this will lead eventually to dollar weakness instead of a stronger dollar.
I think that, the theme of, stronger dollar on the Trump trade has run its course. And I think that, as you said, it's going to wind down a bit. And I think that we have already seen that with the euro jumping. And I think that, increasingly it's going to be hard for investors to bid up the US dollar because of the sheer political uncertainty and what that implies for the US economy. And I think that, the currencies that are some of the currencies that are better placed to absorb this weakness are the Japanese yen, the euro, of course, and also the Swedish krona. The Swedish krona has surged like 5.5% this week alone. It's set for the best week in decades, and that is because Sweden has a lot of companies that will benefit from the inflows on defense spending from Europe, and therefore the krona is very well bid. And I think that krona also has got very good correlation, so it is a very good put option on the US dollar, so to speak. So I think those currencies are very well placed to absorb the dollar weakness going forward.
Ven, thank you so much for joining us. I urge everyone to go and read Ven's great insights in these turbulent times where you see some pretty sharp and shocking moves that kind of could come out of nowhere and always either last or don't last very long. Ven Ram from MLive. Now, Bitcoin falling after President Trump's long-awaited executive order creates a strategic crypto reserve, disappointing the markets. Now, 4 other digital tokens that had previously been highlighted by Trump, Ether XRP, Cardano, and Solana also saw declines, while the creation of the Bitcoin-specific reserve fulfills a promise that Trump made on the campaign trail. The details actually are falling short of expectations. Now, at 4 p.m. London time, Bloomberg Technology will speak with the White House AI and crypto czar David Sachs on the U.S. government's new Bitcoin reserve. Coming up, we discuss if the U.S. federal job cuts are leaving the U.S. exposed to a future tech crisis. That's next, and this is Bloomberg. Now, U.S. employers in February announced plans to reduce headcount at the fastest pace since early in the pandemic, led by cuts in the government sector. Well, Bloomberg Opinion says the cuts, driven by Elon Musk's so-called Department of Government Efficiency, is causing a technological brain drain that could leave the U.S. unprepared for any coming crisis, including the threats from AI. Now, let's bring in our tech opinion columnist, Parmi Olsen, author of the award-winning book Supremacy, AI, ChatGPT, and the Race That Will Change the World. So thank you so much, Parmi, for joining us. I mean, the U.S. tech brain drain. So first of all, I hear a lot of optimism from, UK politicians or UK chief executives that say, we may be able to attract a lot of the big talent. Is it a bit too soon, or can we start seeing it?
I think it's always difficult for governments to attract technologists into the civil service, whether it's in the U.S. or in the UK, because you have this much greater lure of higher salaries and great benefits in the private sector. So I think in hearing about these cuts happening in the U.S., these were already difficult people to hire. They're sort of there because they're patriotic or out of goodwill, and they're giving up much higher paydays. And at the same time, I think it could represent a potential dialing back of the progress that the U.S. is making, like just bringing online government services online. That's potentially going to slow down. But again, it really depends on how these departments enact the cuts, because what we've most recently heard is that Donald Trump has said, ultimately the department leaders will have the final say on what the cuts are, almost kind of framing DOJ's cuts as guidance and suggestions. So we have to see how that plays out. There is this report that the AI Safety Institute in the U.S. could be cut, and that could certainly be a problem.
And when you look at what's being cut in the U.S., when will we have a clear idea if this also hurts innovation? So this is, it touches safety. I guess it touches regulation. Yeah. It could also stifle innovation going forward, especially if it touches universities.
Actually, I don't think the AI Safety Institute isn't a regulator, and they do safety testing on AI models, but it's not mandatory. So companies like Google and OpenAI would be legally in the clear to completely ignore the AI Safety Institute. So I don't think there's really any argument that division could stifle innovation in any way. However, removing it would get rid of one of the very few checks and balances that we have on the very rapid AI advancement that we're seeing today. Currently, tech companies are operating in a regulatory vacuum. There's no regulation. There are these kind of voluntary commitments that they could make. So in a way, that leaves Europe to be the sole major regulator, and the UK, which has its own AI Safety Institute. And there's a few other AI Safety Institutes that have cropped up in other countries as well, like Singapore and Australia.
Parmi, what can you tell us about the Mistral chief executive that is quite bold, saying he could also outperform DeepSeek?
Yes, I mean, we'll have to see their model when it comes out. But I think what he's saying is actually just emblematic of the open source field, which is that open source models are built on other models. And that's kind of the beauty of that market, which is that the work isn't proprietary. It's open for anyone else to build on, which actually is what OpenAI, when they started, almost 10 years ago, they were originally going to be open. They actually became much more closed over the years. And DeepSeek, when they released their model, they put the blueprints on the internet. So you can be sure that folks at Meta and Google are copying those blueprints and building on that too. So we're seeing a more dynamic market, which is a good thing.
So interesting. Parmi, as always, thank you so much for coming on. Parmi Olsen there from Bloomberg Opinion. Up next, a Bloomberg Brief. It's Jobs Day. There's a lot going on in the markets. Danny Berger and Manus Cranny in New York will have all of the big market moves. This is Bloomberg.